a comment from the chat. Hey, Rachel. Hey, David, could you explain a scenario in which term may be the best choice for someone? Sure. To clarify, why would Dave Ramsey swear by it? You want to answer that, David?
I would like to, because I have a term.
Yeah,
and I
me too.
want y'all to know I do. Dave's got one too. They're right in the right situation. I've got a term. When we bought our property, my wife and I, we both took out term policies. That way, if we passed during paying for it, one of us did, the other one would not suffer. We got large amounts on that. Now, when the house is paid off and it's going to run out at the same time, I had it correlate with my mortgage, the amount of years. I'm not going to renew it, I don't think, because it's going to be so stinking high.
Yeah.
For one thing, it's going to be a lot higher. I'm a different age. I might be taking a medicine now. You never know. But that's one way to utilize them. If somebody's wanting to, like your business endeavors, I've seen people use it for that. If I were to pass and I don't have someone to run my business, there's got to be money there for my wife to hire someone and get it going, because you still want the income. But now my whole life is specifically for my burial. That's my choice, not cremation, burial. But that's what mine's for. And my wife doesn't have to worry. My kids don't have to worry. I set it up when I'm young. The price is good and affordable for me. And I set it with inflation. I didn't go buy a $10,000 whole life when I bought it. I bought 4 times that, because I don't know when I die what the price of a funeral is going to be. And my wife and I both did all this together. So we're both prepared for the other.
Let me jump in here, Dave.
Dave, there's a question too.
Yeah, let me get to that in a second. I'll speak my side of the story here. I have a term insurance policy, and the reason I picked up a term is because my thinking was, if I died prematurely before retirement at age of approximately 60, 65, that my wife and my family would have enough income to supplant what was lost with me dead, right? Because I own a business. I am a cash flow producing machine, right? If I fall over dead, my wife's going to have a hard time flowing into the business, taking control of things, right? So in a sense, this is like a key man coverage, right? So if I die, there's going to be a cash lump sum that my wife gets that will take care of things for many, many years, while all the while providing time to either feed somebody into my role as a business owner, maybe a CEO or a president or a managing operator, to then pay that person, to have the funds to pay that person, but then operate the business to sustain the cash flow from the business. Does that make sense? But that's the thing. It's a temporary concern. Why? That's why it's term. Because by the time I get to 60, I'll either have sold out, or I've already have built my business and it'll operate on its own, and I'll have enough savings in retirement to protect against that, right? So I don't need the term necessarily. Just like in David's circumstance, he's got a house. He's protecting his mortgage. So if he dies as the breadwinner, his wife is taken care of. They can pay the house off, or his wife can have money on hand to pay the mortgage payment, so she's not evicted or foreclosed on. But that's a temporary problem, because what happens in 20 years or whatever, his house is paid off, right? He doesn't need the term. So the point being, this all goes back to what we talked about. What is the problem we're trying to solve? And it's that problem your prospect has that decides for you which tool in your tool bag of insurance products you're going to use. It just so happens the vast majority of the time when you're dealing with fixed income seniors, their main concern is just, I don't want to burden my loved ones with some kind of expense for my death. And I know I'm going to die. It's a guarantee. I don't know when it's going to happen. Could be young, could be old. And because of that, a whole life product for final expense is the perfect solution, because whole life never cancels. The rates never go up. That's a nice added feature to be convenient as far as budget goes for your clients, but it answers the problem that you have a plan that's guaranteed to pay out whenever you die. And likewise, answers the problem of death. You're going to die. Don't know when. Control for it. Because with term, you got to die before a certain point because it'll cancel. Now, real quick here, hopefully that clarifies the reason why. And the main thing is the main thing here for those of you watching live and recording is don't think dogmatic. Don't be like term bad or whole life bad and the others are good or whatever. That's not the point. The point is your products serve a purpose depending on the client's needs, challenges, and problems. And just pick the product that's best suited for them. Okay.